Have you ever bounced from one can't-lose trading strategy to the next? Moving averages on Monday, options flow on Tuesday, crypto breakouts by Friday, only to end each week a little poorer and a lot more exhausted? If that feels uncomfortably familiar, keep listening. The real issue isn't that you haven't found the perfect strategy, it's that you're hunting for one at all. Welcome to Wise Money, where intellect becomes income. Today we'll break the strategy chasing cycle and replace it with a durable trading system, a framework built on 4 pillars: edge, risk, execution, and feedback. By the end of this session, you'll have a concrete blueprint you can put to work tonight. Let's start with the hard truth. Audits show that up to 90% of active retail traders lose money over 3 years. Most of them aren't stupid or lazy, they're unfocused. They treat the market like a buffet, sampling every dish until the stomach turns. Without a plan, every shiny setup looks delicious and every loss feels personal. Imagine running a coffee shop that changes its menu hourly. Espresso at dawn, bubble tea at noon, kombucha at dusk. You'd burn cash on wasted ingredients and confuse every customer. Your trading account is the same. Capital is your inventory. Without structure, it spoils fast. Pillar 1, edge. An edge isn't a hunch or a headline. It's a repeatable pattern you can describe in one sentence and verify with numbers. For example, large cap stocks that close above a 20-day high on at least double average volume gain an average 1.7 to 1 reward to risk over the next 5 days, with a 56% win rate. That sentence identifies the market, trigger, time frame, and payoff. Anything you can't phrase that clearly doesn't qualify as an edge, it's entertainment. To find your edge, where you start with a hypothesis, backtest at least 50 historical setups, and record the win rate, average win, average loss, and biggest drawdown. If those stats don't beat break-even after fees, refine or scrap it. Pillar 2, risk. Even the best edge dies if you oversize once. Professionals cap every trade at about 1% of their account. On a $10,000 account, that's a maximum loss of $100 per idea. Small risk keeps every setback survivable and your emotions cool. Add guardrails, a daily drawdown limit, a weekly stop, and a monthly circuit breaker. These rules sound restrictive, but they protect tomorrow's opportunities from today's mistakes. Pillar 3, execution. Checklist thinking beats gut feeling. Before every trade, confirm. Does market context match the edge? Is the entry signal present? Is the stop logical? Does size equal 1 risk unit? And is the order ticket complete? If any box is blank, the trade doesn't happen. Missing a winner now and then hurts far less than funding a loser you never should have touched. Consistent execution turns a statistical edge into real money. Pillar 4, feedback. Journaling transforms mistakes into data instead of trauma. After each session, note the plan, the result, and a one-sentence lesson. Grade rule compliance. A for perfect, B for minor slip, C for freelancing. Review weekly. Patterns leap out. Maybe you overtrade during low volume, or earnings gaps slice your stops. Adjust and repeat. Without a feedback loop, you're destined to repeat the same costly errors. Now let's stitch those pillars into a working plan you can copy tonight. Market and time frame. Daily charts of U.S. stocks over $2 billion market cap. Trigger, a close above the 20-day high on double volume. Stop the low of the breakout candle, rounded to the nearest 10 cents. Position size, account equity times 1%, divided by sense of risk. Management. If price reaches twice the risk distance, 2R, move the stop to break even. At 3R, sell half and trail the rest below the 5-day EMA. Journal, save before and after screenshots. Note a brief emotion check and assign a grade. Run 100 trades under those rules. The process will feel slow at first, but by trade 50, you'll notice your anxiety dropping. By trade 100, you'll have a living edge supported by data, not hope. You might be thinking, but systems kill creativity. Actually, they channel it. Picasso mastered classical technique before breaking every rule. Once you execute flawlessly, you can safely experiment around the margins, different instruments, time frames, or automation, without detonating your core capital. Another worry. Markets change, so rigid rules will fail. Correct? Markets evolve, which is why your feedback pillar exists. If win rate dives, tighten filters, widen stops, or switch venues. You adapt the car. You don't throw away the steering wheel. And yes, building a system takes time. But rebuilding a blown account takes longer. Trading without structure is like training for a marathon by sprinting random blocks until your knees buckle. To prove the point, consider 2 composite traders. Chaser Charlie follows 5 Discord servers, 3 newsletters, and a TikTok feed full of zero-day option heroes. He never logs more than 50 trades in any method, so sample size error crushes him. By year end, he's down 40% and cursing the market. System Sarah focuses on one breakout edge, risks 1%, and reviews stats every Sunday. Her first quarter is flat, her biggest drawdown is 3%, and when volatility rises, she finishes the year up 19% after costs, because discipline lets her edge compound. Here's tonight's homework. 1. Write your edge in a single clear sentence. 12 seconds, not 12 pages. 2. Grab the free System Starter Journal linked in the description and record your next 3 trades, win or lose. Data beats fantasy every time. Strategies are fashion. They fade and cycle. A well-built system is a tailored suit, reliable, adjustable, and personal. You don't need the perfect setup. You need a framework that protects capital, feeds confidence, and adapts with experience. If this message hit home, subscribe and ring the bell. Next week, we'll turn Annie Duke's book, Quit, into a step-by-step stop-loss masterclass, so you never cling to losers again. Until then, trade smart, live rich, and keep turning intellect into income. I'm Wise Money. See you in the next one.